Good afternoon and welcome to the RANsquawk Weekly Wrap Up. So we're just going to take a moment to answer a couple of your questions that you sent into the desk. So one of the main things to come out of this week was the Fed's FOMC statement on Wednesday. This did see the Fed announce Operation Twist, as was highly expected. So this has seen the Fed announce that they would look to sell $400 billion in assets that they currently hold in the shorter range of maturities and buy back $400 billion in the longer dated maturities, with the Fed focusing on the 7 to 30 year maturity ranges for the buybacks. Elsewhere, in terms of what the Fed also said, they did announce that they'd be looking to reinvest their principal payments into MBSs. They also did state that they now see significant downside risks to the US global health. So this was one of the comments that was largely picked up on by the markets and has been one of the reasons for the recent weakness in equity markets over the last couple of days. So one of the things that many commentators expect from this Operation Twist is for it to add around 1 to 1.5% to US economic growth for the next financial year. So that's one of the reasons why they announced the twist. However, many speculators feel that the Fed may have to enact further easing measures as the global growth concerns heighten and growth becomes the primary driver as opposed to inflation, and inflation really becomes the secondary measure. So in terms of other events this week, one of the other things that's come out has been a story that we did see last night in the FT, where they did note that we could see 16 banks in the EU recapitalised. So this has been flatly denied by many sources and European finance ministers today. However, this will be an ongoing issue, and the French banks in particular have been picked up on this week, with BNP Paribas one of the ones in particular that have been looked at. So there has been some talk that a Qatari sovereign fund would be looking at investing in BNP Paribas, and there have been talks on that supposedly. However, these have been denied as well. But one of the things that we will be keeping an eye out on is these banks and their exposure to European sovereign debt. In particular, French banks are noted for having rather a lot of exposure to both Greek and Italian sovereign debt. So that'll be one of the things to look out for. We will still keep an eye on Greece as well. This is continually in the news. So one of the things that we have seen this week is for the Greek to agree on some of their austerity measures. However, the Troika mission is still in Greece, and the Troika still need to confirm that Greece will get the next tranche of the bailout. So this is one of the things that we'll be looking out for over the next week. So the Troika is still in Athens at the moment, and we'll be keeping an eye out for anything on that over the weekend. One other thing to look out for is the EFSF. We still have the European member states. They still have to vote and agree on the EFSS and sign it into law before it can be enacted. So we are expecting this to happen at some time in October. So this event is one of the other things that we're looking out for. So obviously, if any of the member states don't agree to sign it into law, this will be a pretty negative thing for the euro. However, if they finally do sign the EFS into law, that is a pretty good thing for the euro and the prosperity of the eurozone as a whole. So we may see a bit of a relief rally after all the negativity that we've seen in the last few weeks. So one final note is that next week does see the quarter end and month end. So there has been a little bit of talk out of some of the desks in Chicago that we may see a bit of portfolio rebalancing. So they're talking of rebalancing from fixed income into equities next week, as some of the portfolio and fund managers look to readdress their portfolios into the quarter end. So this is known as quarter end markups. So this may see a bit of a rally in equities possibly. However, this is potentially negated by any fears over the eurozone, so it's something to keep an eye on in terms of that. It's also worth noting that in a couple of weeks' time we will be starting to head into the latest US corporate earnings season. So this will be Q3 of the corporate earnings season. So you may start to see some fund managers potentially start buying stocks into the earnings season. So we did see in Q2 some pretty decent numbers in terms of those earnings, with around 80% of S&P companies beating their estimates. So one company that we will be keeping an eye on will of course be Apple. So they did see a very large beat on their estimates in Q2, so we'll be keeping an eye out on that. They're scheduled to report at the end of October. So it's also worth noting that they may potentially announce a date of the launch of their iPhone 5, so it's something to look out for in October as well. So that's it from us for the day. We hope you have a great weekend, and we'll see you again on Monday.